software, enabling the lender to analyze large volumes of data as per requirements. SCOME, a leading fintech company in India. Get in touch to know more.
SCOME Solutions and Resurgent India presents virtual session on Unlocking New Frontiers, Exploring Growth Opportunities in Digital Lending. Mr. Praveen Khanna, Vice President, SCOME Solutions. Praveen Khanna is an alumnus of the Indian Institute of Management, Lucknow. Praveen has rich BFSI and technology experience of more than 20 years. In his earlier role at a London-based financial services firm IHS Markit, Praveen worked in the area of new age banking platforms for global investment banks and buy-side institutions, and saw the journey from paper-based contracts in over-the-counter derivatives and syndicated lending to digital models. Dr. G. Ramesh Kumar, Director General, MSME Bharat Manch, Vice President, and National Business Head, Group PBOS Financial Services. Dr. G. Ramesh Kumar arrives as a ray of hope in the lives of many till date. His laser focus on growth and development and proven ability to deliver results have made him one of most popular leader in the BFSI space. Dr. Kumar brings with him over 2 decades of rich and varied experience in the BFSI space, equity broking, gold loan and MSME loans, in retail, HNI and corporate segment, having served in senior management roles with reputed brands Viz, India Bulls Group, MF Global, Unicorn, Mangal and Muthoot Pappachan Group in India. Mr. Hari Subramanian, co-founder, Neeti AI. Hari, MS, CS, is an engineering and product leader with 2 decades of experience with deep tech expertise in OS, infra, big data and distributed systems domains. Hari led product and eng teams at Uber, Amazon AWS, and VMware prior to starting up Neeti AI. At Uber, Hari built the customer engagement platform, which was a $1B/year annual business saving cost while improving CX/engagement. He holds 14 plus granted patents. Mr. Kailash Kumar Varodia, Chief Financial Officer, Receivables Exchange of India Limited, RXIL. Shri Kailash Kumar Varodia is Chief Financial Officer, CFO, of Receivables Exchange of India Limited, RXIL, a joint initiative of NSE and SIDBI, set up to operate the Trades Exchange. Shri Kailash Kumar Varodia is working with Rickshaw for more than 6 years. Prior to this, Shri Kailash Kumar was heading business development and accounts teams of SBI Global Factors Limited, a subsidiary of SBI for more than 12 years. Mr. Nagin Kommu, founder and CEO, Digitap.app. Nagin comes with over 15 years of work experience as a leader in product management, business strategy, go-to-market strategy, digital strategy, growth and margin improvement across telecom and IT sectors, as well as around 6 years of strategy consulting experience in telecom, IT sector spanning geographies such as India, NZ, Middle East, Southeast Asia. Mr. Arjun Muralidharan, founder, Managing Director and CEO Grow XCD. Arjun Muralidharan is the founder, Managing Director and CEO of Grow XCD Finance Private Limited. He comes with 20 plus years of professional work experience with core expertise in rural retail lending including microfinance, small business loans, secured MSME loans, affordable housing, two-wheeler loans and consumer durable loans.
Hello and a very warm welcome to our esteemed panelists and our audience today on this session about unlocking new frontiers and exploring growth opportunities in digital lending. My name is Praveen Khanna, and on behalf of SCOME and Resurgent India, it will be my privilege to be your host today. We are joined today by an esteemed panel of members from the banking, fintech, and financial services industry. And it will be our honor to learn from their deep domain experience and their journeys from physical to digital lending. Before I invite the panelists, I thought I'll just share a few highlights on the enormous growth of digitization in banking in India. Digital banking and fintech is increasingly becoming omnipresent in India today, right from wealth management, insurance, payments, and of course, lending. The expected market size is supposed to grow from 2 lakh crores to 8 lakh crores by 2026. India, of course, is the third largest in terms of the number of fintechs globally, just after China and US, and indeed has the largest adoption rate at 87% as compared to a global adoption rate at 64%. There are now nearly 700 million users who are accessing internet via mobile in India, and estimated to reach almost 1.5 billion in 2040. From the first phase of digitization in financial services, via the opening of the Jan Dhan accounts, to the second phase via UPI, I think we are now in the third phase of digitization. And this is being led by neobanks, the emergence of account aggregators, and of course, the setting up of digital banking units as proposed by the government. Another pleasing feature has been the substantial growth of rural internet. That's been growing at the rate of 30% CAGR over the last 5 years. And we've almost reached 400 million subscribers, rural subscribers from an internet standpoint. India's digital lending market, which was worth 270 billion in 2022, expected to reach 350 billion by 2023. There's reports which suggest that 52% of adult Indian population is now digitally active and using fintechs for credits. Banks, of course, have made substantial headway in digitization. There's the Kotak 811 apps. SBI has introduced YONO. ICICI has introduced InstaBiz for MSME lending. SDFC has launched Express Car Loans. So there's substantial effort that's happening from a digital standpoint. Millennials and demographics, that's another big advantage for India. More than 50% consumers in India are now showing preference and acceptability for EMI cards when it comes to shopping or for any credit need. Overall, 3/4 of the borrowers are now being led by tier 2 cities and Gen Z millennials who are optimistic and buoyant about digital lending services. The mindset of government and regulators, I mean, that's been a big plus. The recent proposals by Finance Minister Nirmala Sitharaman as a part of her budget, the Agriculture Accelerator Fund, plans to set up the digital public infrastructure, plans to formulate the national data governance policy. All these are positive steps. Of course, some challenges do remain. There are challenges around fraud concerns, challenges on digital payments. For instance, in FY 2023, the total number of fraud cases in banking systems were upwards around 15,000. Privacy concerns on data, the gap in terms of credit access to MSME segment, that still remains a challenge. This is a sector that's contributing 30% to the GDP, 45% of the industry output, 40% of our exports, and 90% of job creation in India. So it's very essential that we enable credit access to the MSME sector. So we have a very diverse panel today. Very happy to have them on our panel today. And first up, I'd like to invite Dr. G. Ramesh Kumar. Dr. Kumar brings with him over 2 decades of rich and varied experience in BFSI in both retail, HNI, and corporate segments, having served at senior management roles with reputed brands via Indiabulls Group, MF Global, Unicorn, Mangal, and Muthoot Group in India. Dr. Kumar, of course, is a philanthropist. He's also an author and thought leader. He's a BFSI expert for over 2 decades and has been touching billions of lives with The Color of Blood, Red. He's also a startup mentor and has a very varied and diverse experience. He's currently serving as Vice President and National Business Head for Partnerships at Rupee Boss Financial Services. So I'd like to invite Dr. Ramesh for sharing his views and also share a little bit about the gold loan industry in India and what are the key implications from a borrower or lender standpoint. Over to you, Dr. Ramesh.
Okay, thank you so much, and namaste to one and all. It's a pleasure to be here, and I want to first of all thank Resurgent India to have invited me for this discussion. As you mentioned, Praveen, the digital lending landscape is flourishing. It's a disruption in the industry today. As we speak, fintech companies contribute to more than 50% of the overall digital lending landscape. And if you see, the growth rate is hovering at around 48%, which we expect by 2023. From the gold loan industry standpoint, though I have my 1.5 decades in the gold loan industry, conventionally, if you see, gold loan has been considered as a last resort of lending, and every other household during their crisis, in terms of getting credit, they used to literally travel to the pawnbroker, and now it is the organized players, of course, all the banks and the NBFCs, and carry those ornaments right from their home to the branch, do the entire, wait for a long period of time for their turn, do the loan appraisal, and so on and so forth. Now, with the new digital lending, that has emerged in the last couple of years, a few of the NBFCs and banks have ventured into the online gold loan, where it has become more convenient for any family or any borrower to just, with a click of a button, just that, they just feed the basic details, feed the KYC details where the credit assessment is done. So the entire transaction has become so seamless, and it becomes convenient for them to avail a loan. Just that the banker has to just visit the borrower to collect the ornaments, and that's where immediately the funds gets transferred to the customer's account. So I believe there's a huge the ecosystem has become so much robust that of course gold loan has not taken as is been now expanding in terms of numbers. If you see, during the COVID time, when all the banks, everything was shut down, it was gold loan industry that was emerging, and right now it is the fastest growing industry. So I think from that standpoint, gold loan is going to remain, and the digital lending from the gold loan perspective is going to also benefit the borrowers and the individuals today.
Perfect. Thank you so much for sharing that context, sir, and the journey that you've seen from a physical model to a digital model, from the borrower having to go to pawnbrokers to now regulated entities. I think that's a big change. I was just looking at the RBI data, and there's been a 20% Y growth on the gold loan lending side. So just a follow-up question: do you also sense demographics is also behind this? Because I think the younger generation is more consumption oriented versus the physical assets. Would you sense that also has a role to play?
See, there are two aspects. Basically, the southern region, in terms of the geography, I would say, has been the major, the dominating zones, or the sectors or the sections who have been using gold loan as a opportunity. Now, even the other states from the north and the west and the east also started building up, because after a lot of awareness program that has come in. From the young generation, see, what happens today is anyone who wants a quick money, quick availability of funds, and want to just roll out or just give away the time involved in visiting the branch and spend a huge time in doing the appraising and all. So even the young generation is also contributing to it. So they are also adding to the numbers in terms of the growth is concerned.
Perfect. Thank you so much for sharing your views, sir. I'd now like to invite Shri Kailesh Kumar Varodia. He's the CFO of Receivables Exchange of India Limited, a joint initiative of NSE and SIDBI, set up to operate the TREDS exchange. Shri Kailash Kumar is working with RXIL for more than 6 years now. Prior to this, Shri Kailash Kumar was heading business development and accounts team of the SBI Global Factors, a subsidiary of SBI, for more than 12 years. He's also part of operations, systems, and product development during his tenure at SBI Global Factors. So I'd like to hear your views on TREDS, and also as an expert in this field, if you could shed light on the benefits that small businesses are getting via the TReDS platform. What is the growth story there, and what are the kind of challenges that MSMEs might face while using TReDS?
Thanks, Praveen. And Dr. Ramesh has already said the contents with respect to the contribution of fintech in the digital lending space. So before I just explain what is the benefit and what are the processes and everything, or what are the numbers. So the whole concept of TReDS is to bring the liquidity in the MSME sector. Now everyone knows that factoring is started in 1991, almost now 30 years plus, and bill discounting and invoice finance is already there in the banking industry for more than 4 decades. But what TReDS bring is the transparency and a digital way of financing the invoices to the MSME sector. Now everyone knows that contribution for MSME is more than 30% in the GDP, but these are the players who actually get the difficulty in getting the finance from the banking sector. Might be they don't have a collateral, or that their structure is not that professionally well organized kind of thing. So TReDS bring the digital platform for financing against the receivable of the MSME based on the strength of the buyer. This is the initiative taken by RBI. So we are fully regulated by RBI. TReDS is TReDS receivable discounting system for the MSME receivables, and it is totally digital transparent way where MSME can choose their interest rate with respect to their invoice financing. And this is the first platform or first initiative taken by RBI. So there are various schemes for the MSME. But what about the receivable where they are supposed to wait from the buyer to get the money? Now the platform is so simple that once you get registered, once buyer is also present, you just upload your invoice, the buyer will accept it, and based on the acceptance of the buyer, there are multiple financiers who will come on the platform and bid their interest rate, and this brings a competition. When it comes to competition, there is a price discovery, correct? And the rates are quoted by the financer based on the strength of the buyer, correct? And that brings, so take example an MSME who goes to the banking sector and he get a 12% or 15% with whatever limits on their balance sheet. Here there is no limits on that particular MSME balance sheet. First, it is always be on the buyer without recourse to the MSME, correct? So their balance sheets are not analyzed. They don't have to knock the door of each financer. Today we have more than 60 financiers present on the platform. So all financer who's ready to take a call on that particular buyer is basically financer for the MSME. And yes, as I already told, the price discovery. So here he is getting it, say if it is AA rated or A rated, his average pricing what we have seen is 7.5 to 8%. So almost 30 to 40% financial cost they save. So now specifically touch upon the benefit what the MSME get. One is obviously it's a totally digital, transparent and paperless platform, and so there is no follow-up is required. Everything you can the journey you can monitor on the system, correct? Second is without recourse. It's not borrowing for you. So once you realize the money, your receivables get out of your balance sheet. So it is converted into cash. That brings the liquidity into your business or your system. And then obviously the price discovery. Okay, the price discovery which plays a very important role over here. So that is the benefit and multi-financer model. And what we have seen is that sometimes the MSME is saying the good performance over here. The bankers are ready to offer other services, other products to that particular MSMEs also. Now, as a challenge, I'll say for MSME, there is no challenge, to be very honest, to come on the platform and do discounting. But yes, there are some limitations because as I told you, the MSME get funds based on the strength of the buyer. So buyer acceptance on the platform is mandatory. So that is a NACH auto debit mandate. You can say it simply as a ECS mandate kind of thing, which we take from the buyer and the financer when we onboard them, which allows us to debit their account on a respective date. So financer we debit when the financing is there with respect to the vendor bills are on the platform. And on due date, we debit the buyer account. Okay. So the buyer has to be very disciplined with respect to honoring the payment. So out of the trades accessible, he is supposed to make the payment on say 15th of June. He can very well tell MSME, aaj paise nahi hai, I can make the payment after 3 days, 4 days, 5 days kind of thing. And MSME, poor MSME, because he is supplying 80-90% of the business to that particular buyer, he said, okay, there is no problem. But on the platform, once the MSME get the funds, they are out, completely out. It's without recourse. On due date, we are going to debit their account automatically. So this brings a discipline on the particular buyer. Plus, yes, MSME is getting a cheaper fund, so that will bring that eye opener for the MSME also. So MSME is who's offering a cash discount to a particular buyer at 2% for 60 days, which brings annually 12%. And if they are getting at 8%, it's good amount of saving as far as the financing is concerned. Second biggest point, I'll say today, all three platforms we have done around, I say 1.68 lakh crore of financing is a huge amount, and 100% we are growing every year. More than 52,000 MSMEs getting benefit out of it. More than 3,000 plus buyers are registered on the platform. More than 60 financiers are there. But if you see the 2015-16 record, there are 6.33 crore MSMEs are in India. And if you just go to Udyam registration, which is now compulsory for MSME, there are 1.70 lakh MSMEs there in India. So kitty is huge. We have just scratched the surface. We are not even 0.5%. What is the potential market is there? Correct? So these are the limitation, I'll say. But as I told you, we are growing every trades. We have 3 entities. We are growing 100% every year. And today, we are doing, at least as a trades platform, RXL, we are doing 3,000 plus crore of financing every month. Pre-COVID, we are doing 200 crore every month. You can see 10 times, 15 times more than that. And all three platforms, we are doing 9,000 crore of financing every month. So you can see what kind of liquidity get pumped in from the trades platform in the MSME sector. That's all on my side.
Perfect. Thank you. Thank you so much for sharing your views, sir. And I think you've raised very, very important points with respect to the MSME sector, sir. I think one of the most fundamental elements of any digital journey is the ease of use and how paperless it can be. So I think that is a big plus with the TReDS platform. The constant liquidity crunch for MSMEs and the availability of cash access that you've highlighted, that is so important for MSMEs. The ability to cross-sell other products to the MSMEs, the lower cost to credit, which you've rightly said, almost 30 to 40% lower cost to credit, which I think will be a big benefit. And the ability to grow the market size, as you've just said, we're just scratching the surface. Digitization is still in such a nascent phase from an India standpoint. Some studies are still indicating that only about 5% of the lending in India is happening digitally. And as you've said, only 0.5% on the TReDS platform. So huge scope for growth. Very happy to hear those views, sir. And thank you for sharing those views. I'd like to now invite Mr. Arjun Muralidharan. Mr. Arjun is the founder and managing director and CEO of Grow XCD Finance Private Limited. He comes with about 20 plus years of professional experience with core expertise in rural retail lending, including microfinance, small business loans, secured MSME loans, and affordable housing. Arjun was the CEO of Gram Vidyal and was instrumental in transforming the business into a regulated NBFC. Arjun, we'd like to hear from your perspective, your journey, and of course, what sort of regulatory challenges do digital lenders face? And in what ways could those be alleviated or addressed?
Yeah, thank you. Thank you so much, Praveen. Thank you all. Thanks for this opportunity to be part of this forum. I think just to clarify on the digital lending piece, my primary experience has really been more on the rural lending using the feet on street and the collections using feet on street. So one of the things that while it's probably not directed to the question, one of the things I'd like to add on to is that I think digital lending, in the whole concept of lending, has to be reasonably phygital, because ultimately there has to be the physical angle from a collections perspective. So I think that should never be treated as a completely digital lending, right? So the digital, there is a limitation to digital with respect to lending, which is where it has to be with respect to sourcing, or with respect to underwriting, or with respect to communications and payment options, etc. I think those are all very important. And depending on the amount of data available, whether you need to have physical underwriting or not is a question. but ultimately collections has to have a physical, leg and an arm. I think that's one thing. I think from a regulatory perspective, I think there's been a lot of changes in the regulatory pattern per se, right from who can do the dispersal to where the collection has to be coming from in terms of the escrow account mechanism. There has been changes on that, so there has been a lot of operational challenges also that has come out. But also one of the other key thing also is that digital lenders cannot arbitrarily decide what is the scorecards that are being used. Right? They have to expose the scorecards. That's another important thing that have come out. So I think these are some of the key I would say challenges that have been brought out from the digital lending regulations perspective. So that's kind of my 2 cents on this piece.
Sure. Thank you. Thank you so much for sharing your views. I think you've raised a very, very important point on the arbitrariness on these scorecards and the potential inclusion of using scorecards and AI when determining the credit eligibility. So any thoughts on challenges on the rural or the agri lending space that you may have encountered in your experience, sir?
No, I think from a rural or agri, again, if you're talking about digital lending per se, right? Rural, agri, all of these things, the amount of, I think, again, let's split lending into its portions, right? Origination, underwriting, dispersal, collections, right? Origination, can it be done? Is the rural open to digital onboarding? Yes, a lot of people are now getting onto apps and getting loans from there. Underwriting, I think that's the lender's prerogative, but I think it is getting very regulated per se. Disbursement is already digital, always digital, right? Collections per se has to be physical. It is impossible for collections to become this thing. And just to add on to the point, I think regulation per se also has a lot of emphasis on collections and the good practices on collection, which became actually the biggest problem for digital lenders, right? They have all these Chinese apps coming in, and so those are things that actually need to be regulated positively for digital lending to actually do well.
And of course, rightly pointed out, sir. RBI, of course, did an audit recently, and we all know out of those 1,100 digital lending apps, 600 were found to be fraudulent. So that's a big area of concern as well as we go the digital way. I'd like to next invite Mr. Nagin. Nagin comes with over 15 years of work experience as a leader in product management and business strategy and go-to-market digital strategy. He's currently the CEO of a tech startup that develops API-based solutions for fintechs and banks using AI and ML technologies. Prior to this, he's also been associated with Ernst & Young, Value Partners, and Alcatel-Lucent. Nagin, some views from you, from your journey standpoint, and really how effective has the embedded lending experience been from a global standpoint? What's been the experience from other countries? And can there be some lessons that can be drawn from an India standpoint?
Thanks, Praveen. Thanks for having me, and welcome to so basically, in terms of the growth that we have seen in the digital lending space, right? Frankly, if you see, it's been a journey that's in fact 5 to 6 years old, right? Or maybe a little more than that. So the fact of digital lending started sometime in 2015, 2016, when some of the digital lending apps started coming up. And the first things that they started digitizing was the customer onboarding journey, right? So there were stages in which the digitization and the digital lending has happened, right? So initially there was a push in terms of digitizing the entire onboarding journey. Then came the digitization part of the underwriting journey, right? So which is where they started looking at initially the bureau scores in terms of underwriting the customers, but then they also went one level deeper in terms of making use of AI ML technologies and gathering data sources and data points that are alternate to the bureau scores that are available, and then adopting these technologies specifically from an underwriting and risk engine sort of a point of view, right? And obviously with a lot of innovations that have happened on the payments front, we've seen considerable amount of digitization and automation on the disbursal front and repayment front of the value chain of digital of lending in itself, right? There is still a huge amount of automation that is pending, I would say, on the collections and on the collections front. But I think now that's where I think the next set of startups, especially that are working on the lending space, are going to create the disruption in the digital lending, the entire value chain, right? Having said that, we only see a small, minuscule percentage of the total loan base that is being done via digital means, right? Although the ticket sizes might be small, so right now I think the main focus of digital lending in India has only been on, say, a small ticket size personal loan sort of loans, right? We haven't seen so much of a proliferation of digital means in the entire value chain from a lending point of view in terms of, say, the secured lending or other lending areas, right? I mean, it still takes a lot of customers more than a week or sometimes more than few weeks to get a home loan, right? So so I think there is a long way to go just in terms of making inroads in the forms of digital lending, specifically on the secured products, gold loans, or secured mortgages. But I think we've come a far way in terms of digitizing the entire loan journey, especially in the last 6 to 7 years, specifically from a personal loan point of view, right? Now, coming to specifically on the question that you asked in terms of the embedded financing that is happening, right? See, traditionally, embedded finance, right? I mean, what is the meaning of embedded finance? So it's basically offering of financial products or services by non-financial entities, right? So having some sort of a collaboration of these non-financial entities with, say, a bank or institutions, where they could jointly offer financial products, which makes sense for the customers that are buying the non-financial products, right? A typical example of this could be your BNPL product. I mean, that's a buzzword nowadays that's happening in the market in the financial ecosystem as well, right? It's nothing but whenever you are trying to buy something online, either in an e-commerce portal or something like that, it gives you the ability to buy it on credit, right? Rather than paying the whole amount upfront. That's one of the best examples of an embedded finance that we can. Right. Now, if you look at the examples that we have outside of India, traditionally, embedded finance has always been the ballgame of cards, credit cards, right? Wherein you had bank issued credit cards, but also you had credit cards that are being co-branded with a lot of these, say, the Nikes of the world or the Coke or Pepsis of the world, right? Where they used to come out with a co-branding card where you could earn certain loyalty points that you could reuse on the e-commerce portal, the product itself, right? Now, those were for a long time. Those were the only two embedded finance products that were making waves even outside of India as well, right? Now, with the advent of digital means, of proliferation and digital means, embedded finance outside of India has grown leaps and bounds. Right? So BNPL is one example of it. Nowadays, we also see finance payments and finance lending happening through gadgets as well, right? So there have been instances of companies, startups, become unicorns who offer financial products through the means of gadgets, right? So there has been a huge amount of proliferation that is happening outside of India. Now, having said that, we also need to be cautious in terms of just copy pasting the growth stories that have happened outside of India to India as well, right? I mean, there have been cases of failures, specifically on the BNPL part itself. For example, in Australia, there have been huge unicorns who've been offering BNPL companies downsizing their operations and shutting down their operations to a great extent, right? I mean, now Australia is also talking about regularizing the BNPL industry itself, right? Apart from just the fintech industry. It's also talking about specifically regularizing the BNPL industry itself, right? Because of the predatory interest rates that they were charging, and because of the nuisance it was causing to the consumers, right? So we'll need to be extremely cautious because any place, I mean, in my personal opinion, any place where the regulator steps in, it gives some amount of concern to innovation, right? So that becomes a bottleneck for innovation to happen. So we need to be cautious. We need to understand the stories that have happened outside of India, the failures also that have happened outside of India, and then build products in a way, wherein it's like sort of self-regulatory in nature. Right? I mean, we don't cross those boundaries and not give the opportunity for the regulators to step in, because once the regulators step in, right? I mean, usually they come up with certain draconian laws that the first the first problematic of that is the innovation. So yeah, so that's pretty much my take on how the embedded finance happen and what India needs to learn from the stories also.
No, thank you. Thank you for sharing your views, Nagin. And I think a very important point that it can't just be a copy-paste job, and we just can't replicate and copy the models that are happening from a global standpoint. We have to be cautious. We have to understand what were the successes and the failures, and then customize it. And what I'm sensing is India is a unique market, so the solutions have to be customized and conceptualized from an India market standpoint. I think a perfect moment for me to introduce Mr. Hari Subramanian. Hari is an engineering and a product leader with 2 decades of experience, with deep tech expertise in operating systems, infrastructure, big data, and distributed systems. Hari has led engineering and product teams at Uber, Amazon, AWS, and VMware, and has now started up with Neeti.ai. He holds 14 plus granted patents. So Hari, a word about your journey from an AI ML standpoint, especially from a digitization perspective, and what major challenges do digital lending platforms face in the process of integrating with the open banking and the open model that's emerging now? Oh, I think Hari has probably dropped off. If I could raise that question with Nagin again, Nagin, what's your sense from that standpoint?
Could you just repeat the question again, Praveen? Sorry for that.
So I mean, what challenges do you sense from an open banking API standpoint? Are there challenges in integrations?
So now, with regard to the financial inclusion vision that we have as India, right? I mean, it's imperative that we move towards digitization and digital banking, right? Of course, regulation has to play its part in terms of allowing such initiatives to take place. And one of the major proponents to make this happen in terms of digital banking is the sort of open banking and the API-led model that you've mentioned, right? Now, there's been huge amount of effort in terms of the API banking or acceptance to API banking and open banking, right? We see now a lot of new age banks are opening up their APIs in terms of providing information to startups, new age fintech, in order to consume information there, then they could be able to offer certain neat products which could tailor make certain products to the consumers, right? However, the biggest challenge that I see in this are there's not just one, there are a couple of challenges, right? One is on the standardization piece, right? When we talk about the APIs, right? Usually when it happens bottoms up, right? When the decisions of how the APIs need to look like and what sort of request and response that needs to be provided is done from a bottoms up approach, in the sense that each individual banks are having their own approaches. This leads to a lack of standardization, which in itself is a challenge, because bringing that scale when you are trying to operate with, say, multiple banks, or looking for interoperability between banks and between financial institutions, that becomes a challenge. Right? So standardization is definitely a major pain point at this particular point in time. Each bank has its own way of spitting out data. Each bank has its own way of consuming data, right? Which is why, if you see, most of the fintechs that you look at even today, right, operate with only one or two particular banks at the max, right? I mean, they are not willing to have integrations in place with all the banks to be able to. Data security, data privacy, all these questions of course play a major with APIs put in place. Even when you go to these traditional banks today, there is a lot of apprehension, especially in the compliance and the infosec and the legal teams of these banks, in terms of how secure will the data be when I'm transferring the data to an API, right? So that it's a problem with the mindset as well, but also a challenge for the tech widgets or the tech proponents out there in terms of how do you address the data security point of view, right? Some of the frauds that my co-panelists were talking about also have resulted in the last few days because of lack of proper data security around APIs and proper data security around storages and all that, right? So these are the two major challenges that need to be addressed for us to be able to take the next growth in terms of open banking.
Thank you. I can see Hari is back with us. Hari, thank you for joining the webinar today. And just wanted to get your perspective from a unified infrastructure standpoint and how to facilitate a seamless integration and interoperability between the various digital lending platforms and stakeholders. And also another criticism around AI is that AI can sometimes be too objective, and there is no human element in AI. So how does one address that? Would love to hear your views on that.
Pleasure to be here. Thanks for having me. And a great question about how does the unifying of the infrastructure really help with just bringing better digital inclusion and lending products to the market, right? Particularly with respect to serving for the Bharat context, there are, I think, different players that are part of the ecosystem and for different types of borrowers and a very diverse set of credit needs for each of these borrowers. So if you just talk about the roles, you don't have just the borrowers and lenders, but you rather have other players in this end-to-end lending lifecycle. You have agents, the borrower agents, who can help augment distribution and really take your products to the market very quickly within their local communities and understand their borrower much better than the lenders can. There are data providers who can come up with much more credible data sources which could be used for underwriting. There are disbursement providers and collection providers who actually are part of the trusted network, who can either ensure the last mile delivery of your credit products as well as with much more reliable collections, right? You also have the other opportunity that kind of, when I think about a unified infrastructure that can bring things together here, is product innovation is possible. Today, the set of lending products in at least for the Bharat economy is extremely small, right? You need to be able to service this segment better, you need lenders that can actually innovate and create very specific products that can be created with a lot less effort and that can target a specific type of borrower. For instance, if you say there is a agri lending as a use case, you want products that can match the harvest life cycle of a specific crop for a farmer that is actually focused in that area, and you need deep expertise and probably a lot of data that can come from that space, using which you can very reliably underwrite that sort of a product. And finally, to bring this all together, I think you also need a network, right? You need network and open protocols where you can enable players that are different, that play different roles in this ecosystem to be plug and play into this network, where they can either discover each other, the market creation can happen, and the players can collaborate together to serve a customer. So therefore, I think, with the context of AI, people talk about responsible AI. I would definitely say that particularly with respect to lending, it is very important for us to have a responsible AI as well, so that you don't have products that are created which discriminate borrowers. There are other countries where regulation already is there, so that it protects the borrowers. We definitely need that regulation as well. Just outside of AI, you generally need that regulation. And today you have players that actually specialize in specialized roles, right? So there are in digital lending, and many of these players are also starting to innovate in the market, but the scale unlock still hasn't happened. And in terms of the network, I think there are various open networks that are up and coming. There is ONDC's Financial Services Network. There is OKIN, which is also ramping up. I definitely believe that an open model where multiple players can be part of such a network and will really unlock value. And definitely looking forward to how some of these open networks pan out and how such a unified infrastructure for lending can be realized.
Perfect. Thank you for sharing your views, Hari. And I think I totally resonate with you that open networks and open protocols is the way forward. The ability to bring all the players on that one platform, that will grow, that will really drive the next phase of digitization in India. If I could come back to you, Dr. Ramesh, on how has the integration of manual and digital processes in lending to MSMEs in India facilitated a consistent and significant increase in access to credit? Furthermore, if you anticipate the possibility of complete digitization, or do you see a phygital model as earlier specified in the MSME sector?
Well, as you mentioned in your introductory remark about the MSME segment and the sector, which is growing. Today, we have more than 7 crore of MSMEs registered. Unregistered, there is no limit. In fact, that's how the industry is. And they are the backbone of the economy. And there is a lot of trust which has come from the government of India and they have advised banks to achieve at least 20% year-on-year growth in terms of the lending is concerned. So there is enough of funds there to reach out to MSMEs. And of course, traditionally, a conventional way of lending is, of course, meeting with the customer visiting the branch, doing the entire KYC norms. There could be two segments herein. One is the low ticket size loans, which may not require that kind of personal visit. It could be done through the digital lending aspect, and of course, which could be up to 25 lakhs unsecured business loans that can be looked into. And anything about 25 lakhs would require personal discussion with the customer, the visit to their factory, their units, and trying to do the basic due diligence, and that will remain. So of course, with the kind of demand which is around $380 billion, that's the deficit which is existing today. There's a huge gap. So MSMEs have to be reached out through various modes, be it online or be it offline. We as an organization, we are one of the largest distributors in the debt financing, and we have 100+ banks and NBFCs we work with. So we've been meeting average 500 to 600 new MSMEs on a daily basis. And this is the kind of response or the kind of feedback we get from the MSMEs is they still want a offline comfortable, unless and until you don't touch and feel. आप जब तक मिलोगे नहीं तो हमें वो confidence नहीं आता है. I want to apply for 1 crore loan, and it just cannot happen on the online. So that one-to-one connect is very important here. Of course, for a big ticket size loan, and for a low ticket size loan, it could be on a digitized way. So that will continue, and that will only increase basically on the. That's my standpoint.
Perfect. Thank you for sharing your views, sir. And as rightly said, so Vishwas tabhi aata hai when you have that in-person touch,
Correct,
that builds a bigger trust between the lender and the borrower. So I think what I'm hearing is digital will continue to be the way forward.
Yes.
And it's all about the risk appetite. How much risk can one take? from that
Absolutely,
standpoint.
absolutely.
Kailesh, sir, if you could elaborate on the recent RBI announcement on the TReDS credit insurance for the TReDS transactions, and also the secondary market development at the TReDS platform. If you could help on that, sir.
Yeah. Yes, Praveen. So basically, to just for your information, the trade credit insurance stopped in India, I think, in 2009, obviously because of a few reasons, correct? And then after around 2 years back, again IDA has started that. Started in the sense we have done a sandbox testing with one of the insurance, and then that study report got submitted to the IDA, and India came up with the product approval, I'll say, or guidelines with respect to trade credit insurance for the factoring or invoice financing on a trades. Now that has been RBI has taken in 8th February 2023 in MPC committee report where our honorable governor, he announced that the insurance can be a fourth participant on trades platform, correct? So that will be a game changer. I think that will be a game changer. Why? Because today, if they, as you know, that the trades works on the anchor-led model, in the sense based on the strength of the buyer, and the MSME today 30% contribution in GDP, and I think it's more than 50 lakh crore, correct? But if you see, MSME is supplied to a corporate or a government department or PSU who have that kind of credit strength. It's very limited. It can be 15% or 20%. But there is another 80% to 85% KT is there who are micro and small supplies to medium. That medium don't have a rating, or that rating might be a triple B or triple B minus kind of thing, correct? And if you think as a financer, you want to take the exposure where you have a comfort level with a double A rated and triple A rated kind of client. But once you have a risk sharing partner, okay, our insurance is available, the whole game will change. And specifically after the announcement of NBFC can also come on the platform, who are mostly or sector specific. For them also it becomes a one kind of additional support kind of thing. So insurance coming on the trades platform, it will be game changer. Plus it will be a transaction to transaction kind of thing, correct? Today, if you go traditional way of insurance where it was purely a whole turnover clause when we are supply based and he will cover his all buyers. Here trades is a basically transaction wise, obviously, but it will be taking based on the buyer strength only. So it will be a good support, and that definitely going to bring more traction on trades platform. Now, with respect to the second question, which is refinancing on the trades platform, yes, this was already envisaged, and this is already put in the trades guideline issued by RBI in the initial guideline also, and then again it was got repeated. So here they have made an announcement because RBI said let this market get mature. Okay. When we started, we were doing around, as I told you, 1920 pre-COVID, we are doing around 200, 300 crore of financing every month, which is 1,000 crore by all three trades platform. Today, all three trades platform monthly, we are doing 9,000. Again, I'm repeating the same. And the outstanding book is also around 21,000 to 22,000 crore kind of thing. Now, this is the area where if a particular NBFC or a bank, where they have taken the exposure on a higher cost, okay, they are also facing some kind of liquidity issue or some fund problem, they can offload those particular portfolio to another financer, might be a multinational bank. You don't want to do one invoice bidding, but they want to take exposure of directly on 100 crore kind of thing or portfolio based exposure, and they want to offer a better rate to that particular financer. Definitely this will again bring a more liquidity into the market. And coming by, as I told you, NBFCs are now allowed. Previously it was only banks and NBFC factors. In recent guideline, NBFCs obviously they have to apply to RBI for a COR, and this NBFC comes, and you know that NBFC cost of borrowing is high. If they get one kind of support where their portfolio can be bought by some other financer at a better rate, they can play 100 basis or 200 basis arbitrage on that, and then again they come on the market and take up additional exposure. So this will bring a liquidity into the market. This from my side.
Perfect. Thank you. Thank you for sharing your views, sir. And as you rightly pointed out, the element of insurance becomes a very game-changing move, plus the addition of NBFCs on the platforms, and with more lenders coming in, there'll obviously be more liquidity and access to credit from the MSME standpoint. So thank you. Thank you so much for sharing your views, sir. I'd like to ask Mr. Arjun on what sort of outcomes have collaborations among stakeholders in the digital lending ecosystem delivered? How has collaboration helped the digital lending market? Mr. Arjun? Or Hari, you want to take that question?
Hey, sorry, could you please repeat the question?
How has collaboration and the network effect helped the digital lending market, and how do you foresee that from a future standpoint?
So, I mean, one thing I would say is that, again, goes back to a couple of points that we talked about in terms of the network, as well as the various roles that are there, right? So I think, and another very interesting aspect of collaboration here is how can the opening of various data sources actually really help with digital lending in this process. So from a Bharat context, open banking is actually super interesting because now with account aggregator, you have data from various sources, including your banking as well as security sources now getting available as part of the account aggregator. But there is also a variety of other non-banking, non-finance data, which I think can be acquired through a lot of collaboration. For instance, there is data that's available through utility companies. There is data that's available in various marketplaces, user communities. The state and regional governing bodies have a ton of data. Cooperative societies that actually work with specific types of MSMEs have a ton of data. I think, to me, bringing together of these various data ecosystems actually provides a huge wealth of information and new type of information that is now available for underwriting and creation of new products for different segments. And of course, with account aggregator getting the finance data, that is just the beginning. What we really need in terms of collaboration is bringing more of these data sources into data rails that are actually possible, which can then be connected with digital lending platforms, which can start creation of highly customized and personalized products, and the delivery of these products now is possible. So some of the efforts here in terms of collaboration that the open networks and the likes of account aggregator have started are amazing, but I think we need to do more in this space.
Perfect. Thank you so much for sharing your views, Hari. Any closing thoughts, sir? I'm conscious of time. So Dr. Ramesh, any thoughts from your perspective, especially on the emerging AA model, on the account aggregator model?
So I think though the digital lending landscape is emerging, the account aggregator will make a huge difference, because that's going to be it will end up it will be disruption, completely a disruption. A lot of work is going on in the space to collaborate and bring the best out of it. So I think the market is definitely changing. As I said, 50% is on the lending, digital lending landscape, and that is only going to go up from what it is right now. So we all have to, the AI and the API is getting, though not a technical person, what I'm understanding is we have eminent speakers like Hari Subramanian and all of them here. So I think they will be able to share that the market is the digitization. This is the digitization era, and one has to sail with the wind and be part of the growth story.
Perfect. Thank you. Any closing thoughts from your perspective, Mr. Kailash?
Yeah, correctly said by Dr. Ramesh. AI is one kind of game changer, not only with respect to lending, but also with respect to monitoring. Correct, because when you disburse a loan, it's just disburse and then subsequently to monitor that. AI as of now started with bank statement, and today they are going to have the access of from the GST network also. So GST, bank statement, and data from MC or income tax. What Mr. Hari has also said, many collaboration, it bring a complete circle kind of thing with respect to giving a loan or giving some kind of banking facility to particular entities. And today, this focus is now from shifted to traditional way to do a digital way of lending, and to a bigger corporate, to the MSME sector or micro and small, to be very specific. And with this whole mass to cover, I think digital way initiative and more innovations kind of things will all going to play a very important role. And account aggregator or OCEN model is really playing a very important role into that. Even today, to be very honest, trades we are also registered on with AA as a FIU. And tomorrow, once we build up that particular data and everything, we might become a FIP also with respect to part of the account aggregated network.
Perfect. Thank you. Thank you so much, sir. I'm conscious of time. I thought a few takeaways from my perspective. I thought the idea of trust, the greater trust between lenders and borrowers, that's a big takeaway from my perspective. The emergence of open banking, as Mr. Hari specified, and the emerging account aggregator model, which has been endorsed by all the participants, the emergence of insurance and NBFC on the TReDS platform, that's going to be a game changer in future. And I think finally, collaboration and both digital and phygital, I think, is the way forward. That will drive liquidity both from a personal and a MSME lending standpoint. So great thoughts from everyone. Really appreciate your time today. And I guess until next time, it's thank you and bye-bye for now. Thank you so much.
Namaste.
Thank you. Pleasure.
Thank you. Goodbye.